What's up, everybody? So today we hit two trades for over 100% profit, and we actually had a little bit of a loser in between those two trades. So there's a few important lessons to learn, but what I wanted to do is take you back through these trades, not just, hey, here's my profits, let's do this, this is great, right? What I more so want to do is actually go back to the very beginning. How did we find these levels? What was the game plan? How did we get into these trades? What did we do after we entered these trades? And how did we secure big profits today? Right? So I want to go through this step by step. Now, this all starts in the daily juice. You guys in the Discord know, right? Under day trade alerts right here, you have where we send out our alerts. But more importantly, I'd say you have the daily juice. Market update in the morning. And this is the sauce, right? This is the golden nugget right here. Daily key levels every single morning, SPY, QQQ, IWM, and the hottest stocks that we're watching. So today we traded SPY and QQQ. I want to take a look at these levels on the chart, and then we'll get into it. All right, so these are the support levels, the resistance levels. Post those over to our charts, and this is what we're looking at heading into Friday morning today. I want to look at SPY and then look at QQQ. We're going to go over the first trade, which is a QQQ call, breakout into new all-time high. The second trade is a SPY a SPY call, right, trying to go along the market after a pullback. And then the third trade is a breakdown on SPY, switching sides very quickly, getting out of a losing position, and then hitting another big win, making that a really, really green day. So taking a look at SPY heading into Monday morning, let's look at the most recent price action first. So in the pre-market, we can see right here, getting rejected around 607. I look to the left, the high of yesterday was 607, so it makes sense that sellers are active in this area. Now, this has been a key level since last week, right? If we take a look at the price action last week, you had a day plus of support. After you broke down, you regained it, some more support in that area. So we were keeping an eye on 607 last week, didn't really touch it up until a day or two ago. And then with the most recent and most important price action, we can see 607 being relevant again. To the downside, there were two levels that I was keeping an eye on. One was 605.5. We can see that be the low of pre-market trading. We saw some support there yesterday morning and the low of yesterday's pre-market. And then if we look back to the left, there has been a lot of interaction here. Take a look at the high of day right here on Tuesday. And if we go back even to last week, still some more interaction at 605.5. And the last level to the downside that I was looking at right here was 604, right? This was the Monday low, also the pre-market low on Tuesday. When we broke below that, there was a lot of selling pressure. And after we had the big move up, you could see the pullback came right into 604 again. To the upside, you have your all-time high, about 608.5 and 609. So the game plan was to try to look long today, right? I wanted to see a breakout to the upside above yesterday high of day. That could give us the long into the all-time high. And if the market wanted to pull back a bit, that's fine too, right? We have a key level right here at 605.5. We could try to catch a long off of this, trade it into the pre-market high, trade it into yesterday high of day. But if we did break below that, there's good reward to the downside, right? We like going long off of 605.5 because there's about 1.5 points into that key level. But if we break below 605.5, we have 604, right? So there's also 1.5 points to the downside. So really just watching the 605.5 level, seeing how price interacts in that area, that can give us a good hint of what to do when we get there. All right, now let's go over the QQQ as well. So with QQQ in the pre-market, you could see this break above that 530.5. Now on Wednesday, that was the new all-time high. So you get a break above, and you can see heading into the open, you're testing that previous all-time high. So that was our first opportunity to take the Qs long, retest of previous all-time high, see that previous resistance flip into a support, right? See the previous area of selling pressure turn into buying pressure, and then we can continue to long that into new all-time highs. Other levels that we were looking for were 529. We could see that pre-market action yesterday. That ended up being the high of the day. And then we have the 527.5, which was the initial all-time high. We found a higher low right there on Wednesday. And then we have that being the low in here in pre-market trading. Now below that point, we have the 526, 525.5. This was an area last week on Friday, this week on Monday, where we had a lot of interaction. And you guys can see here that we had a big move above on the NASDAQ, and look at where we started to get support throughout Thursday heading into Friday, right off of that 526, that 525.5. So any move down into any of these supports above this key level right here, we'll call this the golden zone, the golden level. Any type of pullback above this point is bullish, right? We're trying to get a pullback opportunity to long this into new highs. So now you get the levels for the QQQ, you have the levels for SPY, and you understand the game plan. So now let's go into the first trade of the day. We're going to watch the 1 minute and the 5 minute. So heading into the open, you can see that we are retesting. We're right around that previous all-time high that I mentioned right here, right? We are around that 530.5, seeing that pullback into the open, go into the smaller time frame. And what do we want to see here, right? We just talked about it. The game plan is to look for a break lower, get a pullback opportunity off of 529. And if the market's really bullish and we start to break and hold over 530.5, then we're just going to long that into a new all-time high. So let's zoom in right here. Let's hit play and see what happens. Good price action right off the jump, right? The market opens right over the previous all-time high. The next candle, retest, push off of it. We get a red candle, still a wick, right? Still buyers being active in that area. And at this point, we're looking to get into a trade, right? We're seeing the break and hold over the previous all-time high. The 5-minute candle is looking pretty good. And what I'm waiting for is for price to continue bouncing off of this level, continue using that previous resistance, previous all-time high as a support. And I do want to see at least a 5-minute candle close above that point. So our first entry was at 9:36. We got into QQQ 531 calls, 0-day expiration. Hit play. And there you go, right? You have that first 5-minute candle closing right when this candle closes right here. We're about 40, 50 cents off of this level. To me, I'm close enough where I have a good risk to reward. But trading it into all-time highs, what we have to understand is that we've never been here before, right? So what we really need to focus on is how the trend develops. So what I like to do is use the 9 and the 21 EMAs. Now, I like focusing on those on both time frames, all right? So we can leave them up right here. And those moving averages, that indicator, it is not the be-all, tell-all, right? It is not the deal breaker. If we lose the moving averages, it doesn't mean that the trade can't hit profit in a different way. So I don't want to use those moving averages as this rigid structure where it has to have a perfect move with them. It can just help us get a better feeling of momentum and trend, all right? So we get into the trade right here as the first 5-minute candle closes with strength above the moving averages, above the key level. I also like that more of the body of this candle is closing over the level than exists underneath it. And of course, in the smaller time frames, we can see within this 5-minute candle, there was good interaction off of that previous all-time high. So we're taking our entry. Our stop loss is going to be the low of the day right here at 530.3. So let that set that stop, 530.3. Our target to the upside, we don't want to put too rigid of a structure over this, right? Because we have never been here. So it's just guessing to the upside, but let's give it some room. 535, right? Do we think we're going to hit that? I don't know. It's a pretty big move out of the QQQ, but we'll give it space. And what we can do is focus on the trend. All right. So let's zoom out a little bit right here on the 5-minute. I just want to give this space. And then I want to zoom in on the 1-minute right here. Leave that on auto so it can follow price. So we're in this trade right now. Let's see how price develops once we're in it. Very big push to the upside. Very quick move right back down into our entry. Now remember, red candles are perfectly fine, right? Because when you get into a trade, it would be nice, but it's not just going to go straight up, right? We're not going to enter, a green candle is going to come in, and we're going to hit 100% profit within a minute. Has it happened before? Can it happen? Absolutely. Anything can happen, right? But at the end of the day, you can't bet on those home runs instantly developing at the snap of a finger. You got to give this space to breathe. Don't choke this trade out, right? You have to give it room for that natural volatility to play out. So we have a big move to the upside, and what happens in an uptrend, right? Up and down and up and down. So you need red candles in an uptrend. So don't let red candles fool you or scare you or bring fear to you, right? Or make you do dumb things, because they're part of the process, and the process leads to profits. So we have that pullback. We're watching the price action. We also have the moving averages right here, those colored lines. They're showing us trend and momentum. They're guiding us higher. And let's hit play. Continue to push. Continue to push. And as we start to push into 533, you can see that we start to base out right here. Now, at this point, we made a very quick move. You could see on the 5 minute, this was, probably one of the most powerful moves of the week out of the QQQ. From our entry into that high, we had over a 2-point move in just about 10-15 minutes. So this hit about 115% profit. You could see the trend guided us higher. We just continued to hold that trade. We never had a reason to get out. We never broke back to entry. We never broke the uptrend. We just didn't have a reason to fully get out of this until it gave us a significant amount of profit. So we didn't exit on that red candle. We didn't exit at 40 or 50%, right? We trimmed along the way, but the focus here was making the reward worth the risk. And if we didn't have a reason to get out, we should probably let all or some of that trade develop. And what happened later in the trade right here is we just started to base. And as you could see, right, we really just started to fall off to the downside. So very good trade, quick entry, quick profits, very, very clean trade as well, never giving us a reason to exit, like I mentioned. All right, let's move on to SPY. So taking a look at SPY, we already did the levels here. We have the game plan, right? Just as a nice refresher, the break above 607, that's above yesterday's high of day. All-time high is right there. We could go for it. If we pull back into 605.5, that was that support from yesterday. It's also the pre-market low. It was the high of Tuesday. A lot of interaction there. So maybe a pullback opportunity there. But if it does break below that level, if it does get below that key pre-market low, right, we could look for a move into 604, right? That's where all the buying came from. That was the low from Monday. That could be an interesting area to trade back into. So let's let it get into 605.5 and then make a decision based off of the price action. Now this QQQ trade, we ended up getting out of that trade fully at 10:02. So let's go over to SPY and let's go into 10:02. Here's 10:01. And let's focus on the 1 minute and the 5 minute again. You can see that we pulled into that 607 level and rejected perfectly off of it. Take a look at SPY on the bigger time frames on open right here. Watch the interaction off of our level, right? Well, you just got a sneak peek of what's about to happen. But look at that rejection on the open right off of 607. And you can see that right here, right at about 607. On the 5 minute, did not close a candle above. No reason to go long on that breakout, unless you're watching that 1 minute, unless you're getting that tunnel vision, but very clearly rejected and started to sell off. Now, this isn't bad, right? We didn't get the break above 607, so that's okay, but we caught a nice trade on Qs. Now, let's let this fall into our next level right here at 605.5, right? That's where there is another opportunity for us. That's where we have edge, because that is where our key level is. So I'm going to watch the 1 minute come into this level, and then we're going to decide what to do. At 10:10, we get into that next trade. You can see some buyers trying to show up here. You can see the wicks on the bottom of those candles, and then we have this push right into the key level. Now that closed at 605.5. So I want to see if we can actually start to bounce off of this level, right? That's a really interesting candle. It is a full body red candle, right, which is very weak. So I'm going to let more price action develop here. I'm not going to take a trade just because we're at a level. I want to take a trade because something is happening at that level. We go through it. Little bit of buying off of that, all right? So we're starting to bleed below it. That is a warning sign. But let's see if this is just a fake out to the downside. We build back above, and we start pushing, right? That is a very common thing to happen. And that looks like it is what's happening, right? We tried to sell off. You got a bull hammer candle pushing right back into that key level. The next candle pushed off of it. This candle tested it and pushed off of it. So we did not see a resistance at 605.5. We saw the failure of support, but then we regained the level, and now we're buying off of it again. And this is a great example of how levels are not perfect, right? It's not a magical level where if price hits it or breaks below it, we just get into a trade and we magically make money, right? I'd be the best trader in the world. You and I would be billionaires, but that's not the case. These levels, think of them more as like areas, right? And you need to give price space to breathe, to develop, because it has to go through its natural volatility to kind of find which direction it wants to move. So 605.5 starts building up. We get into a SPY call at 10:11. So this 1 minute candle closes right here. I see that we're starting to push out of this downtrend, and I want to start a position at this point. So I'm in. My stop loss is near that low of day, about 60 cents away. My target is trading back into that high of day. I have better than a 2-to-1 risk to reward. I've got a nice setup in here. Let's let it develop. So you see we're back in that level. We push off of it, back at that level, push off of it. We're getting some good buying pressure in here, right? This is looking really nice. Now, what I'm looking for is for us to extend away from this level, really start getting out of that downtrend that has lasted for the day, and use this as a support, reach for 607. Nice pop right there, and we actually trim a third of the position right at 606, but look what happens, right? Right back to those lows. So we achieved a higher high when we got back above this key level, but we didn't achieve a higher low. Now remember, that doesn't mean the trade is completely over, right? It doesn't have to go just like this. It doesn't have to have maximum momentum to pay you. Maybe it wanted to return here. Maybe it starts consolidating. Maybe it sits here for 10 minutes and then goes. So we can watch the price action off of this level. We don't have to choke it out. We don't have to put too rigid of a structure on it. So let's see what happens right here. You can see we start to push off of it, right? So yeah, we are making a little bit of support there. We're still holding, but I do notice the weakness here, right? I do notice that these candles aren't really expanding off of it. I'm not just going to switch into puts right now and become bearish, right? But I am aware. I'm not just ignoring the fact that this price action is happening. I'm not sitting here crossing my fingers 100%, let's do it, right? I'm getting ready to potentially switch into puts if we break below. But I haven't exited yet, right? Because that would be an emotional impulse. I need to manage that impulse and let the chart take me out of this trade and bring me into a new one if so. We do break below, right? So now we're no longer holding that key level. You can see when we broke back above it, 1, 2, 3, 4, 5, 6, 7, 8, 9 candles in a row, holding and making support there. But you had this failure, arguably a head and shoulders, probably the tiniest little head and shoulders that I've ever seen. But the moral of the story here is that just weakness back into that level, we weren't able to really create support here and build off of it. So you start to break below. At this point, I am getting ready to enter a trade. We have a candle closing below. I want to see a bit more extension here, and then I'm going to flip into a short. We do have that extension, right? So we get the weakness, much different price action than the last time we were below the 605.5, right? We dropped below here. Some of that red candle got ate up by buyers. We dropped here. The entire candle switched from red to green. It was a bull hammer right back into the key level. That's showing that the dip got bought up and we didn't sell off of that retest, right? We continued to go above and use it as support. In here, we closed above, no wicks on those red candles, so no activity from buyers. On the next candle, same exact thing. No activity from buyers, no retest up into that 605.5. So at this point, I switch sides. Get out of my calls, right? And although we trimmed one for profit, we're selling 2 of our calls right in here for a loss. After the big QQQ win, we're eating that losing trade, right? We're not getting emotional. We're detaching our ego from the trade. We're not just holding that trade because, well, we want to be right. We don't care, right? We just want to follow the market. We don't want to follow our feelings. So we ended up switching into shorts. Our entry is there. Our stop loss is above that recent high. Right? So you could see the lower high right here that let us lower. Right here is where our stop loss is. And it's never on the key level, right? Because if the key level is an area where there's a lot of eyes on it, a lot of activity, we can expect a retest there maybe, right? And if you get priced to go retest that level, you don't want to get stopped out and miss out on a big drop for big profits. We're in that trade. Our target is 604, about 2 points away from our entry. And our stop loss is if we start to break and hold back above that key level. All right, so I'm going to hit play, put that on auto, give this enough room to develop. And now remember, to help me let my trade develop, I like putting on the moving averages. So I'm going to turn them on the 5 minute right here, and I'm going to turn them on the 1 minute. Now, price doesn't have to perfectly respect these, but these can help us get a sense of the momentum and the trend to the downside. So let's see how this develops after we enter the trade. You can see that in here, we really start tightening. Now, I just want to start focusing on the 1 minute right here. We really start tightening in this general area. You can see that we're pushing into the low of day, right? And as we start to break to the downside, we trim a little bit because we've been holding sideways for a little bit too long, and I got kind of impatient here, so I took some risk out of the trade. That was a bit of an emotional decision, right? So looking back at that, understanding that potential mistake, but it wasn't something that I fully regretted because I didn't take myself out of the trade because I felt that. I just was aware of my emotions. I reduced my risk a little bit, but I still left myself open for this trade to develop. So let's see what happens. We have a strong candle up. Now that's ugly, right? You get that big breakdown, you're holding sideways, buyers and sellers are fighting, it finally breaks in your direction. You probably have a little bit of happiness because you're in puts, you're short, you're looking for those red candles, you're looking for price to fall. It jumps again, it rejects, but then you get a candle like that in your face. Well, that's going to hurt, right? If you have your ego attached to the trade, it's going to hurt. But did we get above the moving averages? No, we're still below them. Did we get above our key level? No, we're still below it. Did we get above that recent high? That's our stop loss. No, we're still below it. We didn't get above everything. The thing we did get above is our entry, and that's red. And we need to break that negative emotional connection. We need to break that negative association with being red in a position. What we just talked about with the QQQ trade is a trade can have many different paths to profitability. It doesn't have to follow this, okay, we're in, so we're never going to see a lower high or a higher high and a higher low. We're going to go straight into profit. It's going to be perfect. I wish, right? But you got to give this thing room to develop. Take a look at the moving averages. Take a look at the level, the stop loss. Those are all things that we can rely on. And take a look at this downtrend. Look at the high of day. Price never came above this point. Right? We didn't even break out of the downtrend. So we have everything that we're looking for here. It could not be going better. So the same way when we're moving to the upside, we don't let a red candle scare us. When we're moving to the downside, we do not let a green candle scare us. A lot of people probably got faked out of that. A lot of people probably got scared. We didn't do anything. We just sat on our hands and said, hey, we have a stop loss. We know if we start breaking the downtrend or we get above this level, it starts taking away our edge and we can get out of the trade with a little bit of a loss. Still green today, perfectly fine. But there's profits down here, right? And this risk is worth that reward. So let's see that reward. Let's be patient. Big rejection off of that level. Exactly what should have happened at the downtrend, respecting that downtrend, respecting the lower highs, and that general area where we were getting buying activity, right? Where we were getting buying activity here earlier. With the break below, look, we were starting to get selling activity in that area. So continuing to give it room. And at this point, this is where we start to get the breakdown and all this pressure that's been building. You can see the sellers are in control, holding that downtrend, and then all that pressure finally gets released to the downside right there. Little bit of patience, little bit of ignoring emotions and focusing on the chart, no reason to get out, and then out of nowhere, right, you have about a point drop. Another trade that went for over 100% profit. Great stuff today. Here are the alerts from today. You could see in my screen, QQQ, right? That went for 115% profit. We traded SPY. We trimmed some in profit, as I mentioned, and then we got out, right? We switched sides into the SPY puts. That's what I just showed you. And that trade hit about 115% profit. Simple analysis, right? All we did this morning was create our game plan. We found the key levels of support and resistance. We decided what we could potentially do with those levels from the bigger time frame, and then we zoomed into the smaller time frames to get a better detailed view of that price action and trade it for some nice reward. All right, that's about it. I'll see you guys later.